Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Russell Rhoads, director of research over at EQDerivatives. Russell, it's great to see you as always, and you have identified some longer-term trends that could suggest bullish action in the Nasdaq-100.
Yeah, well, everybody in the markets is really split on what's going to happen in the second half of this year. And I think at minimum, we're going to see an outperformance of tech stocks, if not just outperformance of tech stocks relative to the S&P 500 or the Nasdaq-100 relative to the S&P 500 for the rest of 2022. And I wouldn't be surprised if we get back to green before the year's over with for the NDX, which is down 26% year to date right now.
Well, let's hope so. My 401k certainly wishes that would be the case. So you saw some longer dated NDX traders showing up here.
Yeah, absolutely. Today, and there are a few trends that I've seen in place, but one thing that I've noticed as I go through the tape every week looking for things to write up on the weekend with respect to trades is there are more and more NDX trades that are bullish, that are focused on December of 22 or even January of 2023 expirations. And one trade, for instance, today, somebody came in and sold 100 of the DEES 16th, that's the standard December expiration for NDX. They sold 100 of those puts for $374, 100 of the 10,000 strike puts. So you're talking about a big cushion between where we are right now, a little bit above 12,000, and the strike price on those short puts. I've also seen longer dated spread trades that are maybe buying some in the money calls and selling some out of the money calls that expire in December or January next year. And I always think that option traders are smarter than the average traders. So I think that we need to give some credence to that.
And Russell, anything that you're seeing in the Nasdaq-100 Volatility Index, or what we call VOLQ, that might suggest a little bit rosier trails ahead?
Absolutely. VOLQ, and this is across the board for all the volatility indexes. You attend conferences, you listen to people on webcasts and podcasts, and they feel like in order for us to claim that there has been a bottom in stocks, that we've got to have some sort of dramatic washout and volatility indexes spiking up to 40 or 50, something that hasn't happened this year, although it did happen intraday for a few minutes for VOLQ back on May 12th, but it reversed very, very quickly. So whatever fear pushed the VOLQ up gave up by the end of the day. And I just don't necessarily think that we have to have some sort of dramatic headline grabbing washout to say that the bottom's been put in for the stock market. We've had other bear markets in the past few years where we just start creeping higher and everybody's waiting for the next shoe to drop and it never happens. I just don't think that's going to happen this year.
All right, Russell, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.